CME Group is launching Micro E-mini futures contracts. Discover how a smaller Micro E-mini futures contract opens the world to greater trading possibilities.
Welcome to Market Movers. I'm Jim Urio with Scott Martin.
Hi, Jim.
Scott, we're days away from the April employment number. How big a deal? Is it a big deal?
It's a very big deal, Jim, especially given that we're in the middle of a Fed pivot where the Fed is watching this data, especially the wage data, very closely, and therefore that's affecting their policy.
Okay, that brings up a question for you. On Monday of this week, we had the personal income number, the wage growth, which was much less than expected. To me, that's the best thing for the market. Can now we afford to get a relatively good jobs number and still not worry about the Fed because of that other number?
I believe so. And we saw that a little bit last month too, Jim. We still saw wage gains, but they're slowing a bit. So to me, that personal income number is very big as we go into Friday and watching the wage number itself.
I like that. Now, before we dive into our trade discussion, I'd like to point out these are examples, not recommendations or advice. Scott.
Yeah, Jim. So I'm watching the ES today, obviously, and just seeing how it's bounced pretty nicely off some maybe kind of bad news from Google last night, maybe a little China trade rumors that maybe aren't going so well, and then decided maybe they are going well. It's just interesting to watch the ES kind of machinations from a day-to-day basis, and it feels pretty big. And I do have some longs on today, so I do want to say maybe, in some individual stocks that is, so I do want to say maybe there's a way to kind of hedge out some of that exposure as far as I'm concerned. So specifically, Jim, I'm looking at buying the week 2, 29.25, 2,900 put spread for about 4.5 ticks. This trade expires May 10th. It raised 225 to make potential 1025. The underlying, by the way, is about 2940.
15 ticks above the market.
Exactly.
Right, yeah.
Just because, and that's not exactly something that could totally fill out, but at least it's a little protection on some of the longs I have in individual stocks as we go into this big number. And as we see earnings come out, maybe a little disappointing.
You know, I like it a lot, actually, even though I'm still a bull, which I have been for quite some time. But I do like it as a means of mitigating risk. I think it's a very good trade.
And it's a pretty fair risk reward there, I believe.
And vols are low, no question about it. I'm looking at it differently. I'm looking at buying the week 2 Wednesday. Now, this goes off 2 days ahead of yours. Wednesday. So, you know, one of the reasons we don't like to do the ones that expire on the day of unemployment is because they tend to lose vol so quickly. And sometimes the real move
That's right. It's
the
over the weekend or it's Monday or Tuesday.
So this
exactly.
is something I've been doing a lot lately. This is a call fly. It's the Wednesday, the 2950, 2980, 3,000 call fly for 7.5 ticks. So it's buying a 30 wide call fly and selling a 20 wide call fly above it. So someone asked me, why are you doing the broken call fly? Because if the market explodes higher, I pay 7.5 ticks for this and it's still worth 10 ticks.
Still
so I
going.
still make 2.5 ticks. However, if you can catch it near the expiration at around 29.80, then you can try to make close to the full amount. Another thing too to remember too, this thing will gain delta as it gets close, which brings up the discussion of the micros that are being launched on Sunday night. If the micros can be great to hedge your delta as your delta increases in expiration. You like it.
That's yeah, I do like it. And I love the fact that S&P 3000 is in your trade, Jim. That's a crazy level. So yes, with the combination of the micros launching on Sunday night, I believe that's a great exposure if you're looking to put something on that, like you said, is kind of around these levels and trying to take advantage of an expanding delta.
Not to beat a dead horse, but what do you plan on using micros for the most?
Jim, you love beating dead horses, but I love the versatility of the micros. The fact that you can kind of express yourself in a smaller value, if you do have some bigger longs on in, say, the big ESs or the minis or whatnot, that's a way for me, at least as far as I'm looking at it, to put on some additional positioning.
Okay, just to fill you all in, they're launching 4 contracts on Sunday night. They're each going to be 1/10 of the mini. It's going to be in the E-mini S&P, the NASDAQ, the Russell, and the Dow. That's Sunday night. Thanks for joining us on Market Movers. I'm Jim Urio, where we are helping to make you a better trader.